Hi guys, it's Marissa here, just checking in with another update. Hope you are all keeping warm with this winter weather we're having. So today I'm going to talk about living expenses. It's been a really interesting time for borrowers and for banks in general. We've had ASIC has taken Westpac to court over basically saying that they're not meeting their responsible lending obligations because they relied on the household expenditure method to assess someone's living expenses rather than looking at their actual living expenses. And the interesting news was last week that Westpac actually won the case, where the judge actually believed that looking at someone's living expenses before they get a loan is not indicative of their living expenses after getting a loan. The judge said something along the lines of, just because I'm going out for Wagyu beef and wine pre-mortgage doesn't mean I will have Wagyu beef and wine post-mortgage. And I think that is true. I think Australians do, want to have a roof over their heads, and they do prioritise that obligation once they do get a mortgage and a home loan or an investment loan, and they will make sacrifices in other areas of their life if they need to ensure that they can meet their obligations and they can retain their property. So I agree with the judge. I guess what is really interesting about this is that in recent times we have seen all lenders adjust the way that they take into consideration an applicant's living expenses when determining whether they're going to approve a loan or decline a loan. And we have seen, the fact that they have done that has resulted in many people's borrowing capacities being diminished or reduced to a certain extent, because the reality is that, Australians generally will meet all their obligations, financial commitments, and they'll spend whatever's left over. And by the time you put in all the buffers into consideration that the banks apply, if you're spending what's left over and you're not saving a huge amount, it does basically mean that you won't be able to meet the bank's assessment criteria, and hence your borrowing capacity is reduced. Given that this case has happened, and Westpac actually won the case against ASIC, and the judge actually supported the fact that, Australians can and do change their living expense habits when they do get a new loan or increase their debt. It's going to be really interesting to see how this is now filters through into the lending space and into loan applications in general. So I think it's still a really interesting space in terms of people's borrowing capacities, and I think we're going to see a lot of movement in this space over the next 6 months or so. So I'll keep you posted as we go, but definitely what I would say is that still most lenders are wanting to assess living expenses based on what you've been spending for the last 3 to 6 months. So if you are looking to get a loan application, to do a refinance, to do a debt consolidation, to buy a new house, buy a new investment property, any of those things, really do keep a lid on those living expenses leading up to the loan application, because they are hurting some people in terms of being able to borrow the money that they want to borrow. So at this stage, that's definitely the case. It'll be interesting to see following the judgment in the ASIC versus Westpac case whether there will be some changes, so I'll keep you posted on how they go. But at this stage, I would recommend keeping a lid on your living expenses leading up to an application, to ensure that your living expenses in the 3 to 6 months before the loan application submitted are basically a fair and reasonable amount to be spending on living for you and your family. I guess just another update in relation to land tax. The land tax fight continues. Every day we're seeing more and more people and associations and business groups that are very angry and very concerned about the land tax aggregation impacts to the South Australian economy, South Australian property values, and just business and consumer confidence in general. And I actually have been doing a lot of work in this space, a lot of advocacy work. I met with the Treasurer yesterday. Unfortunately, that meeting didn't give me a lot of hope. They the Liberal government do seem pretty adamant that they are going to proceed with this draft legislation. But I think the draft legislation will be coming out in a couple of weeks. At that point, there will be a chance for people to respond to that. So I do still encourage people to voice their concerns to their local MPs and really spread the word to make sure that people know that you're not happy about this, because I don't really see who's going to win out of this proposed aggregation changes. I think there's going to be a lot of losers, and I think that everyone, or the state economy, will be the biggest loser, which will impact all South Australians. So it will hopefully the draft legislation will be better than we're expecting. But even yesterday, the Treasurer couldn't tell me what that was going to look like, and it is supposed to be released in a couple of weeks. So that will be interesting to see how it ends up looking. So we will keep you posted on that. It's obviously a hot topic, so you'll hear a lot more about that from me. But yeah, keen to also hear any thoughts or questions that you have, so you can contact me anytime, reach me through Facebook, and yeah, I'd love to answer your questions. So have a great day, and we'll speak to you soon. Bye.